With that, we are very excited to introduce Mike Reinhart, the CEO of Quisitive. Mike, welcome, and over to you. Thank you.
Fantastic. Thanks, Rob. Appreciate the opportunity. I see a lot of familiar names on the attendees list, and certainly appreciate you guys joining us. What I want to do is just walk through kind of a quick overview. Many of you know the story, but we'll give you a little bit update on our strategy, talk about M&A, both in terms of how we accretively grow, but also our organic motion that we think complements that in an important way. So we'll kind of move forward here on the slides. I think I've gotten control. Doesn't look like it. Pooja, go ahead and advance to the third slide, please. Thank you. So kind of our macro level mission is really driven around this idea of what I call becoming the Microsoft partner of the future. Many of you know that Microsoft has always leveraged a key channel relationship with partners to activate their technologies in the enterprise. And we'll talk a little bit about that and really have built this model. I've been working in partnership in the IT services space and with Microsoft over the last 25 years and have really built out kind of a unique position with them, but really twofold about how we're going to market under this mission of the partner of the future. One is really building this scale partner with and through Microsoft centered around helping organizations move, operate, and innovate, leveraging the cloud, both on an organic growth basis and some of the things I'll talk about there, but also then obviously bringing together these highly fragmented partners across the footprint. But in addition to that is really complementing that with a set of software services where we build our own IP and bring that to market as part of how we build and grow our business. So we'll touch on that relationship a little bit. And really, when you think about, some people ask why Microsoft and why do they need it? Again, Microsoft is the premier player in the enterprise across a diverse group of capabilities where they have not only the Azure footprint that we all hear and talk about around infrastructure as a service, platform as a service, and the things that they do there, but they also have these really other powerful cloud elements that they're the leader in around what they call Microsoft 365, which is also all the things around collaboration and messaging and Teams and the kinds of things that you're hearing about. But then also what I call finished goods, which are their SaaS offerings around Dynamics, ERP, and CRM. And that full breadth and how in the enterprise space, it really creates I think, a huge differentiation. So really, our partnership with them is centered around, we're 100% committed to their platform and helping them win in the battle against the other cloud providers, and really gives us a unique position with them, access to training and other kinds of things that just wouldn't be available to other organizations. The other thing is we're highly recognized. It's always great. We're all very biased and think we're fantastic firms, but it's great to get recognized on the channel. Microsoft selected us as their 2019 United States Country Partner of the Year, which is the highest award that they give. The other thing, though, that's changing about how they partner in the universe, and we're seeing other major tech providers do this. They've always had these different establishing partnerships by having gold and bronze and platinum and whatever credentials. What Microsoft is really doing, something that's changing this fundamentally, and I think you'll see this across these different organizations, is actually moving. That's more of a marketing message thing that didn't have a lot of substance. I'll be honest, in the past, it was pretty easy to clear that hurdle, get a couple of marketing reference stories and you're out there. But Microsoft is really changing that and creating this really rich audit service that they bring in and really go in depth to understand your process, your methodology. And we are one of very few that are securing these unique specializations across a broad dimension. And again, it's just taking and demonstrating depth and breadth around the technologies and activating that with them at their customer. So as we think about our business model, I'll just touch on this real quick. There's really kind of this set of services as we help organizations in their journey to the cloud. And really, there's a set of project services that are all about, understanding the journey to the cloud, building out and looking at what their migration strategy might look like, which things should move to the cloud, which shouldn't. We set a full complement of those services. Microsoft brings us in. They've introduced us to over 200 enterprise customers over the last 24 months because we're their agent to go in and help the customer understand why choose the Microsoft cloud and then help them along that journey. Along the way, we start to bring these recurring revenues that Tim referenced, is really around starting to introduce different recurring revenue streams into the model. One is around the reseller of the Microsoft licensing platform. Those are all on 3-year subscription models. We get 15 to 30% margin on those as a representative, but then complementing that with managed services that are really focused around the high value services of managing and operationalizing the business in the cloud. But then most importantly, we have this really unique capability that I think is the long tail in the cloud journey, which is all centered around these rich, what I call solution services, really understanding how to productize and take capabilities to the market. We announced recently that we're partnering with Grant Thornton for them to re-engineer and reimagine how audit services are done through SOC compliance and other things. We do have all the expertise and build all that product for them, help them deploy that to their customer, run it in their Azure tenant. We're the licensing arm providing managed services. And is really a big differentiator is having that really rich understanding of how to apply these cool new technologies to bring value to customers. So our M&A strategy is really focused around these target profile, and Tim referenced this, is companies 10 to 50 million in revenues. They're growing businesses that typically 10 to 12% EBITDA contributions, have some level of recurring revenues. Sometimes that's through an IP that they may have created, could be through licensing managed services, looking to create scale and reach and do some of those things. And we've had really good success doing that, and I'll touch on a couple of those. But there are lots of these kinds of businesses out there. To Tim's point, though, earlier, there's kind of the haves and have-nots right now. Some have weathered the storm well, and certainly good discussions going. Others, they did struggle through the pandemic, especially at that size. If they happen to have a customer of size that was in one of the distressed industries, whether it was hospitality or others, it could have had a pretty big impact to them, but a short-term one. And we see a lot of those firms coming back into play in the next year. Our deal structure is, typically this model of where we're leveraging cash that we raised through the capital markets, certainly using equity as a currency. And then to Tim's point, we've always had this mindset of earnouts being a key component of transitioning the business successfully. We actually look for owners that are going to be embedded in helping us build and scale this, not looking for somebody who's looking to exit. We're not in that buying model where somebody wants to get out in 12 months or something. That's just not the right fit for us. So we're really targeting those guys, to Tim's point, that was about they've got a lot of gas left in the tank. They've built an interesting business. And what they actually want to do is be part of really scaling something out. Those sellers fit our model and like what we're doing because I'm one of them. I grew up in a garage, with two guys building it from nothing, scaling it out and growing it. We have this unique relationship with Microsoft that allows them to be part of a wave that is created with and through them to activate organic growth that they may not be able to create on their own, and bring that together as part of a combined business value. One of the other things I think that's important about our M&A strategy is about what I call unlocking our potential. A lot of people in an M&A model talk about back office integration and cost synergies and those things. And we certainly, look for those opportunities. But the real opportunity in my mind is actually bringing all that together at the point of the customer and creating that value. So we have a whole mantra around one Quisitive and the power of one, and really creating a rich integration strategy that combines our brand integration, where we'll all operate under a Quisitive single brand and transitioning over to it, back office systems and the things we talked about, but also team and process and methodology. One of the biggest things as I embarked upon this strategy, I interviewed lots of people at Microsoft, lots of CIOs and customers. And one of the things they said was their biggest frustration is having to work with 4 or 5 different partners to enable their digital transformation journey. What they really want is the proverbial one throat to choke. And really in that model is thinking about how do they go to us as a single enterprise with rich capabilities on a broad spectrum and serve their needs on many dimensions. They don't want to work with me and have 4 different companies with 4 different approaches and 4 different contract types and all those things. So we bring all of that together and have made great progress in doing so. And we believe are able to increase wallet share per customer as a result of that. couple of the acquisitions we've completed over the last, I guess, a little over 15 months now. We did an acquisition out of Ottawa, Canada, Corporate Renaissance Group last June. Really helped complement a component of our business around 3 cloud capabilities inside of Microsoft, especially around the Dynamics platform, which is their area of specialization. They also had some really interesting recurring revenue streams, not only on licensing subscriptions, but a first-party platform called mPerform. That's an employee performance management platform with over 100,000 users that really helped us kind of blend that and diversify it. It was a 30% EBITDA business that we were able to acquire on about a 6 times revenue model, or 6 times EBITDA model, apologize. The second one we completed was earlier this year in Menlo Technologies. Really helped us scale our global reach. About a $17.5 million business that really gave us access to both East Coast and West Coast in the US, where they had offices in both Silicon Valley and Washington, D.C., as well as a strong offshore development arm in Hyderabad, as well as a growing footprint in South America to give us the nearshore, offshore combination along with our footprint here in the US. So, real quick snapshot, give you the timeline. We're roughly a $50 million business as we sit here today, with about 20% of our revenues recurring and continuing to grow, about a 16% EBITDA business. We've got 8 North American locations, have completed those acquisitions, did some financing this summer that Echelon was a part of with us, and did some things to do some balance sheet cleanup and things as we move forward, and looking to really see 2021 as a strong M&A. We had a lot going on. We also have a product called LedgerPay that we're launching, which is a unique element that we're building out, a full payment processing and payments intelligence platform. I won't spend too much time here talking about that, given the focus of this discussion, but that's an optionality that's built in to our business that, again, as we work with these customers, we see these business patterns and the opportunity to invest in software IP that we think can bring unique value to a broader market set and to shareholders. So kind of why we're market differentiated. We have a rich history working with Microsoft, one of few that meets with Satya Nadella and Kate Johnson, the president of the US, and others globally, and get access through programmatic funding and other kinds of things that is quite unique. Obviously, we're continuing to grow our recurring revenue streams through the various channels I talked about, including our first-party products like mPerform and LedgerPay as we bring that together. And then again, sort of this combination of the momentum of the motion that we create with and through Microsoft and this unique relationship that we bring to the sellers of these businesses that allow them to activate, scale, and grow in ways that they wouldn't be able to do on their own or have access to. Quick cap structure for those that want to get a peek into where we sit today. About $180 million market cap, as I talked about, on roughly a $50 million revenue business at 16% EBITDA. That's what I had prepared for the discussion today. I'll hand it back over to the team at Echelon and go from there. Thank you.
Great. Thanks, Mike. That was very insightful.